Over the last 2 years, since Sam Altman introduced me to ChatGPT and artificial intelligence, which I now choose to call synthetic knowledge, I've built this spreadsheet that I present on Google Sheets of the 60 stocks that I think are key to the three phases of delivering AI. First, building out the infrastructure, then creating the software and hardware to deliver it, and then applying that to our needs. That when I say our needs, business individuals for the rest of our lives, because I think synthetic knowledge, much as synthetic energy changed our lives, synthetic knowledge will change. But I then apply what I've learned being a businessman for the last 60 years to how do you choose the companies? Well, in my life, building a company means you build a machine that produces profits, and those profits perpetuate additional growth opportunities and go on for years. And so these are the companies that I believe that are going to drive the AI revolution, the synthetic knowledge revolution. And again, my emphasis is who's going to make the most money, and then share that money with their shareholders, and which are the stocks that are properly priced at this time for me to invest in so that I can make my life better. So that's what it is. And the first thing I always focus on, are they making money, and are they going to continue to make money? So my research focuses on the next 3 years earnings per share. What are they projecting? What are the analysts projecting that these stocks are going to grow at, their earnings per share over the next 3 years? And you can see there is a tremendous variance. Apple says they're going to grow their earnings per share at an average rate over the next 3 years of 11%. AMD says they're going to triple that and do 37%. And then there's Iran Energy that says they're going to grow their earnings per share over the next 3 years an average of 367%. So which company do I want to invest in? Or would I be satisfied with Micron Technology, who says they're going to grow their earnings per share over the next 3 years at an average of 63.48? Well, that's not the only thing to consider. The other thing to consider is what is their current PE ratio, and are they currently, even though they're generating greater earnings per share, are they priced right such that I should buy them? And that's going to be given to me based on their PE ratio. Again, Apple has a PE ratio of 32. That means their price relative to their projected earnings is 32 years of earnings to justify their current price of $236 per share. Then I come down here and look at others, and here's ACMR has a PE ratio of 7.7 as opposed to 32. Now, how you then interpret that is to say which are overpriced and which are underpriced is their PEG ratio. Apple has a PEG ratio of 2.9. ACMR research is 0.42. So I highlight on my sheet that highlights to me what are those that are underpriced and which are those that are overpriced. And you can see that you get some that are very extreme. Here is Snowflake, which has a PE ratio of 259%, a PEG ratio of 12. A good PEG ratio is 1 or below, but they're 12. Their earnings are growing at 20%, but they're extremely overpriced, and they're not the only ones. I mean, we can look at Tesla. Projected growth of 24.69 with a PE ratio of 134, giving us a PEG ratio of 5.44. So what I then do is say, okay, based on these numbers, and particularly the PEG ratio, who's the top performer? and I plug that into my algorithm. Now, that because my algorithm is going to take in other considerations as well. And the one of them that I want to point out is their earnings per share. What is their earnings per share going to be on January the 28th? And if their PE ratio, forget what it is here, if their PE ratio comes back to the average of the S&P 500 for the last 20 years of 25, what is their stock going to pay for, or sell for? So here is Apple's projected earnings of $11.67 on January the 1st of 2028. And if their PE ratio is 25, the S&P average, their stock will sell for $291.75. Well, what's the current price? 236. That's not a big gain. That's a 24% gain if their PE ratio is 25 against their earnings projected by them and Wall Street for January the 1st of 2028. So then I show you here what their rate of return from today's price to their projected price based on their 2027 earnings, who gives me the best return. And here you can see, here's Apple is a 24% return, but here ACMR is 180%. Here's AMD, 150%. And then we have here is ARM. They will lose based on their projected earnings of 2028. They will lose 55% from today. So that's what I do, and that gives me guidance as to which of these 61 stocks do I want to consider for my portfolio, and then how do I want to weigh those relative to what percentage of my portfolio do I want in them based on their projected earnings and their projected price. Now, that's not the only thing that I take into consideration. I also want to look at what is a fair price to buy them today based on this analysis. And I come in here and I show you exactly what I think the fair price is, so I can watch it. And if we have a dip and I get an opportunity to buy in, and again, I focus on the stocks on the yellow of the 60 that I consider, because I think overall they offer me the best opportunities. Now, the other thing that I want to take into consideration is, are they recognizing a growth opportunity? And so what I recognize in the world is, when you're going to grow, you're probably going to have to build up your workforce. So I go back and I ask, over the last 3 years, how has their workforce increased or decreased? And you can see that some companies, here again is ACMR, they've grown their workforce by 81%. That tells me that they're gearing up for growth, whereas Apple has grown by 12%. I then take and rank them. And again, this becomes another number that goes into my algorithm to compare these companies from 5 different reasons or areas, such as growth of earnings, their PEG ratio and PE ratio, their earnings per share projections, and I give a different weight as I give a different part of that weight to their employee growth. And then the final one that I use is, what is their past history? What is the average growth that this stock has shown over the past 5 years? And I put a weight on that. Now, why do I want to know that? Because some stocks, if we just look at this past year, some stocks are depressed, particularly those stocks who are in the semiconductor business, who were relying on you buying a toaster and a new electric vehicle, and you didn't do it this past year or past 2 years because of inflation. But prior, they had a good return rate. So I then rank them to give me such as here's AEHR, who's had an average rate of return of 172%. That's the highest, or second highest, of all the 60 stocks that I track. So it gives me some additional ammunition to figure out, okay, of all these variables, now let's put a weight of importance on each one of them, and let's figure out which are the best stocks for me to buy and own for the next 3 years. And that's what this column is, total overall rank. And you can see they run from 1 to 61. And my number one stock right down here is IREN Energy. Now, what does IREN Energy do, you might ask? Well, you click right here, and that's going to give you a podcast that I have created, about a 15-minute description of exactly what IREN Energy does. I created that podcast on January the 21st. Now, if you want a written briefing on IREN Energy, that's right, that's what you click here, and it comes up on your computer screen, and you can then print it so you have a written document. And what I do is update these pretty much as the earnings per share come out. So, such as Apple was back on 12/7. Actually, I just updated that. I need to change that date. I did it this morning. It's actually, I'll do it right now. It's 22/2025. So I update them so that you can come in and say, what is the latest news? You don't have to search articles. You come in and I've done the search. Actually, I use AI to do the search so that I can give you a rundown of exactly what's happening. And then, as I say, I rank the 60 stocks. I told you IREN is my number one stock, based on the algorithm of the 5 variables and the weightings that I put on them. My number 4 stock is Micron Technology, and here's my number 2 stock. This is Siemens. This is a German company that you're probably not aware of, but it is, again, if my numbers are accurate, its price will go up 259% between now and January the 1st of 2028. So that's how I use AI to help me invest in AI. Something that I've learned is that the stocks will tell you what their future performance is going to be if you'll dig into the financials, because forget the short term. The short term gets changed by an announcement from a lab, from a hedge fund from China about something that they did. So that will change daily. But we are going into the era of what I want to call synthetic knowledge. Man has what he learns, but data is now, from the data collected over thousands of years, we have so much more knowledge available to us, and that is what artificial intelligence is going to bring into our lives, much as artificial energy has changed our lives. Let me give you just a brief on that. We came to this earth with the energy in our bodies. We have adapted by creating artificial energy. The biggest elements of that right now is oil and electricity. It's given us the ability to do things that we couldn't do with what we had on our own. The same thing is now happening relative to knowledge. You have all the knowledge you've acquired in your head. There's massive about more out there. It's now becoming available through artificial intelligence, which I prefer to call synthetic knowledge. And that synthetic knowledge will learn from itself and from us. And we will become one with that synthetic knowledge. And our limitations will be those that we inflict upon ourselves by not knowing the right questions to ask. But generative synthetic knowledge will help us reach beyond that. This is the investment opportunity of your lifetime. I have tried to break this down, take a look at the ecosystem that is going to break this synthetic knowledge into three phases. One, to build out the infrastructure. That's what's happening now. That's what Iran Energy does. If you'll listen to that broadcast, they're building the largest data centers in the United States at this time. Then we will deliver the hardware, which will bring it to our desktop, and then we will build the software that will take us into a new agent world. The agent will be on your desk, and you will assign a task, whether it's to manage your house, manage your business, manage your medical life, manage your financial life. That agent will become one with you, and these are the companies today that are going to be a part of it. My task is to update this so I can make better investment decisions, and I want you to have access to this on my website, Best of Us Investors. Come to the website. You'll find access to this through our gold platform. I'll give it to you for 14 days to become comfortable with it, and then you take it and run with me as we advance this further. Because again, this will all change as my agents teach me more and more how to expand upon what I have now. Again, I hope I can help you in this. If you have any questions, attend our Friday Stock Talk, and we'll dig deeper and deeper into this so that you feel comfortable with it.